Yeah, there's a few in the podcast room. Michael, you grab 2 chairs. Yeah, there's one in there.
Sure, right over here too.
Yeah, there's one here. Cool. All right, guys. Well, thank you so much for coming tonight. We do this every single month. We've been doing this now for 3 years. We moved into this office in January of 2025. We used to do them at Port City Brewing, but now we are hosting them here. We have expert panelists every single month to try to give you guys some education, but also to put you in the room with individuals that are actively doing deals. So what we like to always say is when you come to these, please learn something, take what you can from the knowledge and go and apply it to the real life, but also try to build connections with individuals that are in this room. These individuals are either aspiring or active real estate professionals, right? And everybody's going to have some type of expertise. So we like to see who's in the room first. If you are a commercial broker, raise your hand. All right. Residential broker. All right. If you're buying retail, office, and flex commercial assets. All right. Multifamily. Got it. Single family condos, just individual one-offs. Ever you in the construction, building development, great. Property management, great. Wholesalers, lenders, who's got the money? Lauren does have some money. But so as you can see, everybody in here, property managers as well, does something and has an expertise, right? So that if you saw somebody's hand that was raised, you need to seek that individual after this. We'll leave the office open to you. Not too late. We all have to get home, but usually we have a good group stay and just continue to network. So let's go ahead and get started. So thank you to Marcus and Dennis for joining us. We're going to let them do an introduction of themselves. Both of them are powerhouse brokers in the DMV area. They're going to have some knowledge to pass on to us, and then we'll open it up for Q&A. So Dennis, we'll let you start. Give us a little, what's your expertise? How long have you been in the business?
Absolutely. I got into real estate, changed careers in my early 30s. I started off at a commercial real estate investment firm called Marcus and Millichap. This was back in 2015. My focus was and has been since then multifamily investment sales, a little bit of commercial, but it's multifamily and development in the DC metro area. So very focused in terms of a geographic and product type in terms of what I specialize in and the teams that I've been on specialize in. A few years ago, transitioned over, was recruited by a company called Horvath and Tremblay to open up, along with my partner, Christian Barrero, multifamily office here in the DC area. Our office is in Bethesda. Our focus within that space is really kind of the private capital, mostly non-institutional. Honestly, anything from like a couple of units when it's redevelopment, but 4 units to 100 units is kind of where we're at. And again, that's existing, stabilized, heavy value add, gut renovations, redevelopment, could be townhouse projects, condo projects, multifamily. A lot in DC, but a little bit kind of in the Northern Virginia, Montgomery County, PG area.
Got it. Great. Thank you for coming. Marcus?
Marcus Goodwin, Washington, D.C. native. Started my career in commercial real estate in 2013 at the JBG companies. First started out for the first 10 years of my career on the development side. Once I started to acquire my own portfolio, I own single family, I own multi-unit rental housing. I'm in the process of under contract to buy my first commercial property and grow that portfolio. I moved over to become a broker is my daytime job, and still have to be on the clock 24/7 when leaks happen and HVACs break and windows get cracked and mice invading properties. So many stories from a landlord perspective that would dissuade anybody from being in it. At Cushman & Wakefield, I focus on leasing acquisitions and dispositions. So I'm currently actively marketing properties for sale, properties for lease, and advising a few different clients through their acquisition criteria, kind of being an outsourced acquisition manager for them because they're small in scale and need help underwriting deals.
Perfect. Well, thank you guys. Let's give them a round of applause. Thanks for doing that. So we'll get started. The last 12 months, a lot has been going on, especially in the DC area. Buyers and sellers' expectations from a investment sales perspective. Marcus, we'll start with you. Has it shifted at all?
So it's funny, I was talking to a client or colleague today, and he said it used to be if you had 10 deals lined up for the year, 7 of them would close. I think we're in the part of the cycle where 3 of them are closing. So you really have to load up on opportunities, both wildly speculative to what you think are damn near certain, because you don't know which ones are going to land over the course of negotiating, searching, surveying, and touring properties. So I'd say it's a really tough time in the market, given that there's uncertainty or has been about where interest rates are going. There's a lot of buyer speculation on the future of the market and hesitation to commit right now before they see the downward trend in borrowing rates. So I'm really thoughtful about where I see the winners happening. And a lot of people are re-envisioning what the future of their organizations look like. So most of my work has been leasing work. A lot of clients who see and understand what a hybrid work environment means now. They didn't know that 2-3 years ago. So we're doing a lot of workplace planning and helping them find their new homes. People are finding new spaces. They're not being committal about long-term acquisitions or dispositions, as I've seen. So I've been able to thankfully shift away because of the dual nature of what I do. You maybe have a different area because you're doing that disposition side.
Pretty similar. I mean, you touched on it. I guess speaking directly to buyers and sellers, owners, over the last few years, owners have really settled into understanding where the market is at. And so it took a couple years for people to really understand that. The market understands that. I don't really talk to too many owners that don't get where things are at, where the cycle's at, where the market is at. They see it themselves through news, through updates that they're getting. Then it really becomes a question of, like, from a transactional standpoint, why are they going to sell? And so a lot of the stuff we're working on right now and we work a lot with, with sellers, representing sellers, regardless of whether the values have dropped. And I'd say right now we're at a low point in the market, which I'll touch on in a second. Deals are happening where there's, if you take pricing aside, there's a lot of, there's reasons to sell, personal reasons, health reasons. There could be an inheritance. Someone gets a stepped up base, and so tax reasons, the family doesn't want to manage it. A parent or family member just passed on the property, partnership issues. There's a lot of distress in the market right now, distress in terms of properties being underwater. And so whether, there's a workout, a short sale, or it's going to foreclosure, we're seeing a lot of that. And from a buyer perspective, it's definitely, it's a great opportunity to, I'd say, like in the last 10 years, the value and basis that you're getting today is better than it ever has been, and by like a long shot. But with rates being where they're at, with construction costs being where they're at, with still heavy regulatory risk, especially in DC, I think if you can take advantage of like creative deal structuring, or you have capital, that's kind of those are the folks that are really kind of taking advantage and making this market work. But there are certainly fewer buyers, but deals are challenging. And from a seller perspective, they're willing to accept those prices, that lower price. But what you have to offer as a buyer is surety of close and experience, track record, something where they're like, I'm not going to just take it on the chin and then sit here for 6 months and add insult to injury, and they're not going to close.
So I have 2 questions. One for you, Marcus. The cancellations of contracts. is that due to buyer default or buyer not being able to perform? Or is that due to phase 1, phase 2 studies? The properties aren't in the condition necessary for them to, or not, the value add component's not there. Why are these 7 out of 10 canceling contracts right now?
I had a contract canceled a week ago, and it was buyer due diligence, finding out how difficult the conversion would be because of neighbors, because of noise concerns. It was a commercial property acquisition, 11,000 square feet, and now it's back to auction. You might even know the one I'm talking about. So I think there's a lot of uncertainty. Phase 1, phase 2 has always been the same. Effectively, if you find something, you can decide whether to back away or not. But it's really, are we getting the lending rates we think we're going to get? Are we going to have to post guarantees that we think we're going to have to post? What is the interest reserve we're being asked to held? What are we going to have to collateralize this loan with? Tough environment all the way around. Okay. So from what I've seen, it's more buyer hesitancy, and sellers, have a reason to sell. A lot of them are getting pressured by their lender. They maybe know that their equity is wiped out, and they're just wanting to avoid having to file for 7 or 11 to not incur the loss personally to whatever they try to collateralize, whether it's an investment property or personal property.
Okay. And Dennis, you talked about distress. Is that debt distress from floating rates, or they weren't able to perform on construction? And how are cap rates affecting that right now? Because obviously the equity may be gone because the cap rates are trading at higher rates than they were.
Yeah, I mean it's construction projects. It's also refinance situations. I'd say the refinance situations, especially in the DC market, are investors that went into deals, and the deal worked because there was a heavy value add component where they were able to get creative and really boost the income immediately. And they're trying to churn through deals and pay off their equity partners and refinance out of their bridge or construction loans. And they are leveraging themselves upon completion to the hilt. And then all of a sudden, 5 years rolls around, 7 years rolls around, and that income that they had generated earlier on is not going up, and in many instances, it's going down because of the creative approaches that they took didn't work out. And now the NOI is lower, but the debt is a lot more expensive. So we're seeing that on like refinance situations. On the construction side, it's the same thing. People overly aggressive or projects that were put under contract and purchased a few years ago, and the market has really just moved. And unfortunately too, like on the back end, the inability to, especially in the DC market, the for sale market has really collapsed in a lot of neighborhoods. So, condo projects that would have penciled before, now there's no one to buy them. Forget the project, there's no one buying the condos. And so you can't sell the condos. You're in it for more. You can't really even refinance yourself out of the project. And so you're either getting a workout with the lender or it's getting foreclosed on. And the project's a big loss for everybody, and it's going out and it's being sold as like a multifamily at half the price.
Yeah. Wow. So let's use that as a segue into lending requirements right now. They've kind of learned their lesson, right? It seems like, because it sounds like they're taking back a lot of product, and banks aren't in the business of operating real estate. So what have they changed in their lending requirements right now that you're seeing in the multi and in the commercial space? Marcus.
Yeah, I've seen them be very stringent about posting guarantees. I've seen lenders do background checks. I've seen them asked to post a letter of credit. I've seen interest reserve requirements go up.
What percentage of purchase price are you seeing for that?
On the letter of credit?
On the interest reserve.
I think it depends on their IO period, the rate. it's hard to quote an exact
Okay.
amount. I have a couple term sheets that I could help you look at and compare,
Yeah.
but I think what we're seeing is startups struggle to get the financing unless it's value add, certain, there's a market for renters, whether residential or commercial. It's really hard to get the lenders, especially the PNC, Wells Fargo, those types of lenders are very hesitant to do anything that isn't proven with multiple locations. So I've worked with a lot of folks that are on the smaller side that are very helpful, and I can give you a list of lenders that I like. I like National Capital Bank, I like Main Street Bank, I like Hingham Savings. These folks have been really creative in helping people that are burgeoning or emerging investors or entrepreneurs that have somewhat of a track record get that financing in the way that you go to Chase and they say there's no way, or TD, there's no way that we'd fund this unless we took you through a 120-day SBA process. So it's just gotten tougher, as Dennis has said, and the requirements are just much more stringent than ever because you could say they learned their lesson, but they've just changed their stance and their posture toward what type of opportunities they're lending on.
Dennis, thoughts on that?
Yeah, I mean, even when they learn their lesson, they didn't learn their lesson in some ways, and that's why we're seeing distress right now. I think another big issue in the market over the last couple of years that has created it was unrealistic appraisals coming in that lenders were relying on in order to get deals done. And, especially on heavy construction projects. And so they're correcting that. Lenders are, those appraisals are getting pulled back now. Appraisers are I think have a lot more restrictions in terms of how they're underwriting deals, what rents they're using in certain markets, and what they have to kind of underwrite their NOI to. So you're seeing that. I mean, there's definitely lenders out there. I mean, I think from a broker perspective, when we're talking to folks, we want to know that people are talking to, they have relationships or they've talked to folks, and if they haven't, then we'll connect them with people, or we're just not going under contract. And if for folks, looking to invest or getting into a deal, or they're doing deals, but they're coming to an owner, or they're coming to a broker like myself, you gotta have had some of those conversations. Otherwise, we're not going to be moving forward, because otherwise, that's a recipe for disaster. It's a challenging lending environment right now.
Let's talk about relationship building. That's why everybody's here, right? Is to build a network to be able to execute on these deals. So tips on relationships: are you sending your top 5 clients all the deals first, just because you know that they can execute? What are some things that you're seeing from a relationship perspective?
I mean, from my perspective, and part of this is like the market I play in. It's a private capital space. I mean, we're selling, it could be $1.5 million deal, a $2 million, a $5 million, a $10 million. And a lot of the active players in our market, a year or 2 years from now, they may have switched their business plan. Maybe things aren't going well, and they're taking a step back, or maybe they're growing into something else. And so we're constantly having to, the way I see it, kind of fill the funnel with new buyers. And a lot of the deals we do, I'd say over 50% of the deals we're working on is new buyers to the market. And that's exciting. There's some work to it, but I'm constantly looking to build relationships with new people. If you're not going to sell deals, because the ones that are buying a lot of deals, after about 6 months or a year and a half, you call them, and it's like a painful conversation right now, talking to the most active buyers. I mean, they want everything.
Yeah.
And it's tough to get a deal done based on that.
Okay. the master negotiator or master networker here, Marcus.
Yeah, no, I think definitely you give the opportunity a first pass to the folks that you know may be of interest, and that's who you pick up the phone and try to get to before you blast out and market and get it on Cravedi and CoStar. So having proximity to people that have access to deals, you can even get access to it before it becomes publicly marketed and start to go down the road of negotiation. I'm working on a 60,000 square foot lease that's totally off market. It's a relationship. I volunteered, helped an organization. They said, hey, we need to lease a space. I found someone who needed the space. This never even became public, and we're negotiating deal terms now. So building that network of owners, operators, lenders, architects, engineers, literally everybody in the value chain is helpful, because once you have a client and you can help refer them an architect or a civil or a dry utility or mechanical or an electrical, like any of these trades, you create value in a way that they know, oh, I'm going to go to Cassidy before I go to Mike, or I'm definitely talking to Dennis before I talk to anybody else, because they know that Dennis is well networked into spaces that can help figure out a deal. And maybe there's no money in it for Dennis today or ever. I may be able to refer Dennis to someone where there is an opportunity, where there is money. So I'd say just get to know everyone up and down the value chain. And as a landlord, and those who own and manage rental properties can tell you, you got your go-to plumbers, your roofers, your HVAC techs, your electricians. You start to build these communities of folks, and they can come to you with opportunities. I bought a 2-unit that my electrician, guy I met, I don't even know where, like on Yelp or something, but he brought me a property and said, hey, they have an apartment downstairs, 5-bedroom house upstairs. I ended up buying it. And this dude just set up the address at my literal house 5 years ago. So I'd say just get to know everyone up and down the value chain, because everybody's doing something that's helpful and relevant somewhere along your journey. And kind of step back, literally driving here, working on another deal for a large agency that needs 25 to 40,000 square feet. My partner is in Seattle, Washington right now, because he sent a guy a message on LinkedIn. Hey, I want to get to know you. Hey, I want to figure out a little bit about what you do. 8 years ago, they never met face to face till 2024. Kept hammering away. Like, we got to meet. You seem like a cool dude. Had dinner, and he said, look, I got nothing for you here. But we have a team. They're out in Seattle. They have a requirement. It's 100,000 square feet. Why don't we fly out together? They flew out. He got hired. It's like you never know where these connections are going to lead, up and down and across the value chain.
And you have to make it long term, right? Trying to get quick money is not this game.
Nothing.
Right? It's got to be a long
for 8 years, and today they're
100,000
celebrating closing 100,000 square foot deal, which is that'll make your year easily.
I'll just add one other thing, like specificity. When people are reaching out and they're very specific about what they're looking for, that really that sticks with me. And follow up. People who follow up like with me, like if I present them something and hey, it's not for me, but here's why, it helps me understand what they're looking for. But if they're just constantly buzzing around, I mean, there's some folks in the market that are newer in the market, and they'll call me and they're hungry, they're specific, and they're constantly checking in. And then I hang up the phone, and I'm telling you, like, this is about a third of the deals that I do, because there are a lot of like off market opportunities, and I'll put in a call with someone else like an hour later, and it's like, that's exactly what so-and-so was just talking to me about. And maybe I haven't done deals with them, but like it was very specific, and it seems like it's a perfect fit, and they could be the right profile. So I haven't done a deal with them, but their profile is right. And like, that's, and it's through, I guess, the development of that relationship, that's helpful. And I've done a lot of stuff that way. So
follow up. How much is too much? Frequency? 30 days, 45 days, 60 days?
Way more frequent, I'd say. Like, I wouldn't tap in with someone twice in a week, but minimally, if I think there's a way for us to work together that I can add value, at least bi-weekly, I should be sending a note. Hey, hope all is well. insert something specific about our last interaction. Let me know if I can be helpful. Here's some things I see going on right now. Here's some of my listings for lease, for sale. Don't know if it's of interest to you or anyone else, but would love to catch up. Here's my cell. Shoot me a text or give me a call if it makes like bi-weekly. Like that's minimally what needs to happen. Can't lie to you today. Nonprofit with 16,000 square feet. I've been following up with this woman 18 months bi-weekly. Today, emailed her. She emailed me back. Hey, I've been thinking about you. I feel so bad I never responded. Let's grab lunch Tuesday. We're ready to make a move. Today. Yeah. 18 months, crickets. Even texting, crickets, finally. People don't mean bad if they don't respond to every call or text or email. They just see it. They're busy, not a priority. They move on. Can't take it personally.
And you were being valuable to her too, and that's the most important thing.
Being valuable. Yeah. This is what I see in the market. Yeah. This is what I'm working on right now. I just moved ULI from 37,000 square feet to 27,000 square feet. Here's some of the workplace planning and strategic rearrangement and realignment we did. And we're only moving them one block, but the building's way better. It's got a rooftop, it's got parking. I'm telling her everything. She didn't respond. I don't know if she read the email, but today she responded 5 minutes after I sent the email. Hey, I feel so bad I never responded. We're ready to make a move. Let's do coffee on Connecticut Avenue Tuesday morning with our CFO. Great. See you Tuesday morning.
Yeah, that's great.
I don't know how often you follow up.
I mean, it depends. Maybe not always as often as every 2 weeks, but consistency is important. A point that you mentioned, people not responding. It's amazing, just that consistency of checking in, maybe sending a handwritten note, done that. And then all of a sudden, a year later, they reach out. They've been getting letters we've been sending, just updates in the market. Maybe they've been getting emails, e-blasts, the handwritten note. And then they see, hey, what we're doing and they appreciated that. But I'd say the second piece, which you also highlighted, is just looking for ways to add value, is key. Connecting people and looking like you actually care about, what they're working on and being helpful. And if you're adding value and you're helpful and you seem like you genuinely care, people are going to be more inclined to reach out, have a lot. And I actually get a lot of satisfaction. I had this happen a few times, even today, where clients are just reaching out for help on stuff that they could have reached out to anyone else, or people that maybe I haven't worked on. And it's like, okay, they could have called a lot of people, but they're calling me. And that tells me hey, they respect my opinion. And at some point, if they want to do something, that I'm going to be on that list. And that's what I'm kind of looking for.
And I think that's kind of our story too. It's been a consistent, I have not done any deals with either one of these guys, but it's been a consistent follow-up. You called me every 30 days. That's why I asked the question. Yeah. I felt like I was on a 30-day ticker. Mm-hmm. But to me, it's, all right, this guy is calling with value added. If you had a deal, you would call me. Right? And I was following up with you to stay consistent. And then we're able to get them in this room, right? And that's just the value of the relationship, and staying consistent with it.
Yeah, give information, and then also I always try to figure out hey, recap. Yeah. What is it that you're doing? What are you working on? Has that changed? Maybe I forgot something, and how can I add value? You might say something where I'm like, okay, I can help with that. Where can I help?
Yeah. And me as a buyer, I want you guys to know what we're buying. So then they are out on the boots on the ground looking for those deals. Same thing. If that guy off market calls them and says, oh, well, this is what Cassidy and BPG are buying right now. And then you want to be the first name that they call. So, all right, tech stacks. 6 to 12 months ago, brokers were going to be irrelevant. AI was going to take over. Everybody was going to be able to transact on the blockchain, which maybe, I don't know what you believe, but eventually that could be something. What tech stacks do your firms provide you, and are you using? CRMs, communications? How are you getting your deal information? Because probably both firms are a little bit different.
I want to hear what you're doing.
From a tech standpoint, yeah, I mean, we absolutely have you got to have a CRM, regardless of what you're doing, brokerage, investment, whatever, whatever the market is you're playing in, you gotta have a database, and you got to be using that database. And then we utilize the database not only to understand, like, from our standpoint as like a broker and representing owners, knowing like all the properties there, but knowing the owners, and then just updating it with like contact, updating it with like little notes about conversations that you're having, even if it's a short conversation. I mean, initial conversations with folks, they might, I've never spoken to them, and like they have zero interest in talking to me, they think, and they tell me to go F myself. I'll put like, hey, told me to go F my, and I'll remember that for the next one and build on that. But, absolutely having a CRM, utilizing, e-blasts, utilizing paper, websites. I mean, I'd say from a tech standpoint, we're probably all using the same resources, generally speaking. Social media is a lot more important these days. Just posting, as everyone knows. I wish I could do a better job of that, but just presenting a little activity on like, make sure you're like following people, you're interacting, and the amount of feedback and response I've gotten from just like sharing on there, letting people know what you're up to, and mixing it up has been tremendous. And that really helps kind of get, I'd say, I don't use TikTok, but like LinkedIn has been extremely valuable. And if you're in business and you're not on LinkedIn and you're not on social media, you're missing out. You got to get on there and just do at least a little something. But I'd say that's like the biggest game changer.
Yeah. We have our like Salesforce customized for our internal CRM system. It has its own name, but we use that internally. Every opportunity, every conversation, whether Ivory wants to buy or Mike wants to sell, or, Dennis wants to lease, I have all my notes just in there. I also know who I can't touch. If CBS is, Joe's client, I know, okay, can't touch CBS, got to stay away from those opportunities. So it's a good way to like define what the turfs are. Social media I find very helpful for engagement and activity and letting people know that you still exist. I don't think it's, for me, been very helpful to the specific deals I put out there, but people come with all sorts of other stuff. I had someone come 2 months ago, runs a daycare, said, hey, I need 12,000 feet. Saw your LinkedIn post. It wasn't about daycares, but it reminded her that she knew me and I existed and I do leasing. So staying active there, getting a lot of visibility and posting consistently so that you arrive more in the algorithm is helpful as someone who's marketing a lot of opportunities. And being good at the tech is helpful because there are a lot of people that are bad at the tech. So understanding how to best leverage Cravedi and CoStar and LoopNet and ensure there's maximal visibility to anything you're trying to put out there, and refreshing the listing so it doesn't look old. Like, there's a lot of little tips and tricks that you can utilize to make people more excited. I've learned a lot from like Dennis's approach and the way that they put out their listings. And I'm like, damn, that looks good. Sending it to my marketing team in the Philippines. I'm like, hey, make it look just like this, but with our branding and our colors and our fonts. But like, let me fill in all the content gaps. But their structure and their form for this 60 unit looks awesome. We need to do, so learn from those around you as well. That's been helpful.
Yeah, and I think it's just, like they said, it's a consistency thing. You have to do it every single week. You have to continue to show up. For us, we're doing around 70 pieces of content a week, and we're trying to get that to 150. Because we want you to see the bubbles in the BPG and associate that with us, right? It's just a brand awareness, and we're trying to document everything that we're doing on LinkedIn, or we use TikTok. We have people that do TikTok videos, and we have Instagram stuff, and it's just, you have to continuously be growing and learning too. And I think the consistency thing on LinkedIn of being the knowledge broker, whatever business that you are in, I do my Sunday thoughts. So every Sunday, whatever the hell is on my mind at that time, or whatever business, usually it's problem or lesson that I've encountered, I write it on LinkedIn just because I want to share that. That's been one of the best things for me. Most of the time, it's not about buying real estate. My last week, it was about Catan. Has anybody played the game Catan? And how I think it is very similar to real estate, right? And that's just a consistency thing that you do. But for the tech stack too, you just gotta.
Well, there's also a lot of value to the old school. A month ago, we hired a kid. 2 weeks in, he comes in to meet with me and one of the executive directors at the firm. Guy who's done pretty well. And he's like, "Hey guys, we got to talk." I was like, "All right." He's like, "I got a meeting set up." I was like, "All right, cool. Who is it?" He's talking to the COO of a company, 112,000 square feet. They want to talk to us about how they can strategize about their move because they got to get out of their building there in mid-block office building. This kid's 22. And I'm like, "How the fuck did you get this meeting?" But we just got him on the phones.
Yeah.
So there's no replacement for some things, which is he made a human connection. He's very affable. He's very, can't say enough about this kid. And I call him a kid, but this guy is just brilliant. He's a hustler, and we're like, keep at it. So we're bringing him in. He's getting a good percentage of the deal. And we had a prep call a week ago, and they're like, "Oh, we're so excited. We met you. It's crazy. They're not even competing the business." So being on the phones is huge.
Yeah.
You make this one-on-one relationship and connection with people that you can't on social because people's eyes glaze over. Even if you get 1% of people really locking in and paying attention, that one phone call, you'll get a higher level of connectivity to the people.
And handwritten notes too. Don't be afraid to put pen to paper. All right, we're gonna go back to real estate. We'll do one more, then we'll open up for Q&A. Build or buy right now? What's the better strategy from an investment perspective? Do you buy the land, entitle it, and build it, or do you buy the box and renovate it?
I just sold a deal I was working on, a 92 unit, because we couldn't build. So I'd rather build something light value add. If I can put anywhere in the 10 to 50,000 a door to get it up to where we can create some differential and increase in rents, I'd much rather be in that place, just because entitlements are so tricky and there's nothing replacing time.
Yeah.
And you end up losing a lot of it trying to transition something from, call it a moderate or low density to a higher density approved. And you got to deal with communities, and there may be just some quirky people that never will get on your side. And then you've sunk how much money and how much time into the deal. That's what ended up happening to us. So,
okay. Dennis?
Bye.
Yeah, I'd probably say I'll almost always buy.
Okay.
That's probably the better route. I think you can obviously add tremendous value in building, but I don't think this is the environment right now, unless you're really well capitalized and you should never buy anything to build it. I think without at least 2 to 3 different plans, because the exit is very challenging in terms of, your plan A, plan B, that's moved a lot. And right now in this environment, certainly in this market, but just generally speaking, there's a lot of uncertainty and there's constant change. And that impacts not only, yourself as a developer, but it's also impacting everyone around you that you're going to be relying on to get that deal to happen, who you're selling it to, who you're renting it to, what your exit is, who your investors are. And it's very unpredictable right now. So, and I think, and on top of that, there's a lot of really good opportunities across all markets where you're buying stuff at below replacement cost. I don't think anything is selling for above replacement cost. So great opportunity at basis. And you might say, well, I don't know if I can compete. I can tell you, nobody in the market right now is looking to overpay. Everyone is very basis conscious, and from a brokerage standpoint, we have to make sure sellers understand that. They're very, and they're cognizant of that. So I'd be focusing on, buying and renovating, buying existing.
Buy. Closing thoughts. You have an investor that has $500,000. What is your advice to them to get into their first and or their next acquisition? $500,000 is the capital that they have.
If you're investing in this region, try to get something under 170 a door with the lightest value add possible, with the most predictable. It's the naturally occurring affordable housing where you're really going to find a good space. You're not relying on a voucher to save you. You're not relying on a rising trend of incomes or an above moderate salaried community. You're really going to be able to market to any and everybody and focus on location. If you can hit right there in that crosshairs, you're going to find a good opportunity and go as big as you can. As much as you can raise money for, go bigger, because there's fewer headaches at scale.
Dennis?
Yeah, I'd just be focused on really great, really good locations, because there's really good buying opportunities in good areas right now in the DC metro area, and also it's a lot more resilient when you're leasing up, whether it's commercial or residential. You're going to have a lot wider array of potential buyers, purchasers in that market. So it's a lot safer. So you have a great buying opportunity. And I think the challenge for buying right now is just like where rates are at. But if you can utilize the $500,000 you have, maybe bring in some friends and family, where you can have a little bit more capital, utilize that. It's tough to leverage these deals all the way up, but utilize that capital and buy really good real estate, because it's really good value right now. And honestly, you have a lot more surety in terms of who you're renting to long term.
Great. We have time for 2 to 3 questions. What do you got for these guys?
Thank you guys, appreciate it. A lot of information. Question for you, Dennis. My name's Ivory, first of all. Talked about how there's a lot more room for creativity in this market. And obviously, as you're a broker, you're representing sellers, right?
Mm-hmm.
How are buyers positioning themselves to get the better hand of the deal? What have you seen that is making or helping buyers out negotiate and close better on their terms in this market?
Having their ducks in a row, to be honest with you. I mean, if having a real clear path for what you're trying to accomplish is important. If you have track record or experience, that speaks volumes. If you don't, really being able to articulate exactly what you're going to do and how you're going to get there is critical right now to get a deal done, because there's a lot of doubt and questions when someone even does see an offer. Hey, is this gonna work out? And is this a waste of time? I think sellers that want to just sell and be done are going to go with people who actually have a clear vision for what they're doing, or they have a track record. The sellers that are price motivated, that's maybe where more creativity can come into play, and someone can play around a little bit more with like seller financing or other creative financing options and make the numbers work to their benefit while also giving an owner that price. So I think the creativity comes when you're trying to work and solve to a number. That's what I'd say.
Thank you. Thank you.
On the lending side, I know you both have kind of talked about issues with closing deals. How much are the lenders taking into account what's happening with the decentralization of the government in the area? Is that posing a risk to stability issues?
I think that's a little too macro of a view. For anyone who's trying to get into bigger deals or first deals, I would always say find someone who's a mentor, a friend, that has a track record, who you can give points in the deal, who can guarantee it for you. That is the path to getting stuff, getting a term sheet out of these guys, or getting under contract and closing, because you really have to have someone, like Dennis said, that has that track record. And if you got to give up 10 to 20% on your first deal, or make it a convertible, call it a loan and convert it to equity with their option, once you stabilize or refinance the property, do that. Because once you get a couple hits on base, you're good enough to have the track record where you can do it. And that's how I got in the game. I got someone, mentor, friend, 15 years older, had a couple of deals, just gave him 20% of the deal and told him I can either pay you out this amount once we refinance, or you can just keep equity and be my partner. He just wanted to cash out. I think he put $25,000 in the first deal and cashed out $80,000. Great deal for him. And it happened within 9 months. So if you can give up some economics and get your first couple of deals done, do it. I think that's more relevant than the macro scene right now, which nobody knows what's going on with the Fed.
Yeah.
Completely agree, and I've seen, like, over the years, a lot of investors go that route. So especially on larger deals, and on smaller deals, like banks are lending. I think you have to have a clear business plan. But the local banks are lending. You just have to know which ones to go to. And again, like Mark's mentioned, if we can be a resource or connect you with folks, we're happy to.
So when it comes to like generating leads, what would you say is like the best method nowadays besides social media? Like, is it pre-foreclosed properties, expired listings, cold calling?
For you, I'd say getting on the phones,
Okay.
like obviously being very targeted and understanding who the right people you need to be reaching out to is, understanding who owns what, having access to all the online resources that can help you, give you a lead gen list of prospects. I think you might have said expired listings, but I think that's actually a good one as well. Those that were put on the market that never sold, maybe ownership had a change of mind. Calling through that list is a good way to generate opportunities, and being differentiated to say, hey, I know you didn't sell it. You had it on the market for 7 months. Let me tell you A, B, and C, 1, 2, 3, why me or my partner can help you sell it ASAP. Give us one chance to just, give us a limited time. I took an assignment for 3 months. I said, hey, please let me lease your property. And everybody else was trying to get this guy to sign for a year. Within the first, 45 days or something, I got him a tenant. So even be willing to, I've done rate cuts, like, hey, landlord rep's supposed to be 2%, I'll do it for 1.5%. And you only have to sign to commit to me for the first 6 months. You can close within 30 days at your discretion. Like, I've changed the terms to say, all right, well, big boy Dennis wants the big fees. Marcus is willing to give me a discount. It makes them feel like they accomplished something, but it gets you the opportunity.
You're betting on yourself too.
You bet on yourself. I mean, you can spend a lot of time and get nothing out of it.
Yep.
Or you could make the deal work.
Yeah. That's awesome.
Thanks for sharing all your insights and thoughts. On the topic of tech stack, you mentioned the buzzword AI.
Yep.
What have you guys learned about how AI can be used in your business? What are your thoughts and opinions on it? Just general comments.
Having conversations with folks right now and still learning. I mean, there are certainly ways where it cuts down on time, but I think it can also, like, too much reliance on it. It also just slows me up as well. Nothing in our business really replaces conversations and human interaction. Like, I don't think you're going to replace that. The question is, like, how, after doing that, can I supplement what I'm doing to get the message, to get updates out to the market utilizing AI, whether it's gathering information or resources, like gathering, content I set up feeds maybe with like a lot of news stories over the last few days to maybe help me like spur ideas, things that I can share both for social media, but also in conversations and talking with people. But yeah, it's kind of like a work in progress, I'd say.
Yeah, I'd say most AI, even ChatGPT 5, does like a B- job of language, communication, email generation, ideation. And I've seen like tricks and hacks for how to make it more efficient. We have our own internal system that we were sold a solution by Microsoft that literally every email I get will give me the suggestion for how to respond. And yeah, that saves me some brain power, but then I have to like think strategically through, is this actually what I want to articulate? Like, let me rewrite and reword this. So I end up writing the email myself. So I have seen it, say, okay, thanks for communicating that. I'm going to get back to you once I talk to someone else. And I can just hit send, and maybe I was 60% faster responding to that email. But I don't think we've fully gotten into the implications of, I've seen some stuff about how it can do Excel modeling for investment opportunities, but haven't seen anyone using it.
And I have some insights on that too. So we use it as a productivity hack for everybody that's on our team. So we want everyone that is working for us, whether it's property management, asset management, construction, how can they utilize it to multiply themselves? We just executed a lease on a retail center that we purchased, and we got all these financials, right? So the individual, especially if you're working with mom and pop tenants, they're not very organized. So they sent us 13 bank statements. It would take my property managers hours to go through and put that into an Excel doc. So we've built out pro formas within our own internal chat GPT, BPG GPT, so it's called, and it's able to evaluate. But then also we uploaded it and they showed us their cash flow positions within 20 seconds. So we're using it for that from a data collection perspective, and it made us feel comfortable moving forward with that particular tenant. So I think that, like Marcus said, is don't let it write its emails for you, because then you're going to be just like everyone else. You have to be that creative to produce that the information, but use it for the stuff that you probably shouldn't be doing on a day-to-day basis to expedite your productivity.
Summarization analysis.
Yeah.
Lease abstracts.
Yeah.
If you're doing a lot of lease, you can throw that stuff in there and do a synopsis. I've jumped in on doing a deal right now off market. I jumped into a sub-market I didn't know. I didn't know anything about the zoning, and used some other stuff. And I could go on to the website and start playing around and kill hours wondering whether I'm headed down like the wrong path. I threw it right into ChatGPT, like on my phone while I was grabbing a coffee, and I was able to like figure out what I needed within like honestly 60 seconds, and I knew my next move. Otherwise, I might have just sat there and like, do I want to do this? Do I want to work on it? Burn 3 hours of my time. So stuff like that, I think it's definitely great. I think putting anything in there where you're like posting stuff and you're just copying and pasting or it's not good. And like I read stuff online, and I don't think there's a lot of value. And you can tell when people are doing that, because it's like, all right, I got it. Like I've seen these same 5 points. People are going to read past that, but I think it's definitely a great starting tool.
I literally use it today. What does WC zoning allow for in Charles County?
Yeah.
Are townhomes allowed?
Mm-hmm.
Is this address in an opportunity zone? Instead of me fumbling around with the maps, cross-referencing, boom. Okay, not an opportunity zone. Hey, you're not interested in this one. This isn't an OZ one.
While you're on a client call, you can do it in real time, and you are adding value that it would take them 30 minutes to look up in the zoning. Thanks. We'll do one more, and then we're going to let these guys get out of here. If we don't have any more, then we'll just do some networking. Cool. All right, well, guys, thanks so much. I appreciate it. We'll hang out and do networking. We'll probably leave it open until at least 8. So stay. Thanks again. That's awesome. Thank you.
Good to see you, Dennis. Always.
Yeah, so I'm going to share you guys.
Yeah, that's right. Yeah, what I mentioned. Actually, the big deal is to fit that high criteria in DC stabilized. But otherwise, it would hit everything.
I don't want to give all